Welcome everyone to the Kendall Report. It is Monday and a pretty good start to the week. I talked to you last night about some of the parameters. A wild day actually. When I was talking to you last night, we had already printed SR2 at 38.13 and change. We traded all the way down to S1. As I told you, we probably trade down to S1. And then we reverted, went all the way back to R2 and actually printed above that and closed near R2 on the session. So wild session, looking at, 150, 160 swing points. So if, in the live room today, we were able to really do real well in trading. And it was just way, way too easy. Because everything became very obvious, at least from my viewpoint and from those of us in that room. A couple things that I didn't want to apologize for being a few minutes late. I got stuck on a task that I had to do a little bit ago and didn't get back as timely as I thought I would. So anyway, I'm here. So let's go forward. Actually looking forward to the new format that's coming in the next couple of weeks. Next week, I'll start to reveal some of those details to you. So there was something that and I'll show you here shortly. There's something we found in the live room today, is that the markets were, we got a buy signal in the models. And typically from that point of the buy signal, there's anywhere from 20 to 34 days of a bias to the upside. So I titled this video tonight, will the upward bias continue? And I think it's going to. The algos that I've been showing you have been really demonstrating exactly that, and the PPMs are telling us exactly what's going on. And now we're getting buy signals out of here on a short-term basis. And you'll see in the database, we're starting to get some pretty decent traction coming in again as well. So I'll go through all these details here in a few minutes. But let's just take a couple snapshot back looking yesterday. S&P was the strongest, 1.19% up. The NASDAQ up 0.86 and the Russell up 0.35. And I think it was an interesting day overall just because of that massive swing that we saw in the markets. There was a lot of flow. I talk a lot about the order book, and the order book was reasonable, but still fairly thin. That's why we had the action that we did today. Let's look at the economic stuff that came out. Really isn't material because people don't pay attention to the IHS numbers, but we had manufacturing and services come out. Manufacturing came out in contraction mode, 49.9. The services is really contracting a lot. It was 49.3 last month, down to 46.6. So we're really getting into some contraction mode there. So we're starting to see maybe some peripheral weakness starting to show up in the economy. Nothing material yet. So as we go into tomorrow, Tuesday, we've got FHA housing prices coming in, expected to be down 0.7. Case-Shiller, another measure of housing prices, expected to be down 2% from the last report. It was 16, expected to come in at 14. And then we got consumer confidence coming in, expected around 105. Excuse me. There really isn't a lot to talk about. There's a couple things that I can mention. I did see somebody, I was looking at the chat beforehand, what did China do? Well, they put Xi Jinping back in power for 5 years. And I talked about this in the live stream earlier today. And basically what the reason why the markets are reacting like this is means there's going to be a continuation of the zero COVID policy. I'm going to bring more of that here in a minute about what I want to talk to you about tonight. And that's going to just keep the Chinese economy from expanding any more than it has. It's some of these numbers that came out the other day, I think it was maybe 3.3. I may have that number wrong, but in the 3% range of GDP. And there's even folks questioning whether that's even real. their numbers have always been questioned on the validity and the strength that they've always presented. But I have argued on this channel in the live room that I really think the zero COVID is to hide the bigger issue is what's really going on with the Chinese economy with all the housing issues and debt. I think their GDP to debt right now is like 220. It's a huge number. And, there's just a lot of issues going on there. But this is really starting to compound some other issues. So China is part of this story that's going on in the big scheme of things, not on our markets at the moment, but that is what's going on. But I saw somebody, and I'm really upset. I should have wrote down this lady's name. Every once in a while, Bloomberg has a guest on that actually knows what they're talking about. They don't work for a mutual fund, just throwing out a corporate narrative. They actually know what they're talking about. And this lady came on, she was from London, and she was talking about the energy situation. And I talked about this in the live room today, so I thought I'd bring it forward into the session tonight. And she was talking about a couple things that is kind of interesting, because we've all been told that the Ukraine situation caused the oil prices and everything to go up, even though pretty much since right after it, they all went down, right? We went up initially, and then we fell back down. We're at $84 right now. And what's interesting, what she said, is there's actually more oil on the market now than there was before the Ukrainian situation, and that would be reflective in the prices. And the reason why we're at 84 right now is because of what I just talked about, China having zero COVID policies, but it goes further than that. All of Asia is evidently about 19 months behind on the increase of coming back up and getting more traction and more demand coming back on oil. So one of the things she was talking about is that there's a huge pent-up demand for oil that ultimately is going to come out of Asia. So if you're watching the replay and you're in Asia, maybe you can confirm or rebuke this, but I'd be interested in your comments. But it's interesting because now what happens is when they're probably going to stay in somewhat of a zero COVID posture going through the winter. Makes sense, right? This is if there's going to be any kind of influenza or any stuff floating around, it'd be this winter. So, but if we come into next spring, all of a sudden, all of the demand on oil is going to change substantially. And the chances are that we're not going to have more supplies than what we have right now. So I'm going to go on record here as saying I think we could see well over, not 100, but 150 and maybe much higher. And we'll see what happens. We're not going to know about any of this. This will be a comment that you can call me wrong on or say I was right 6 months from now, but we're not going to have the answers until at least 6 months from now. But the point is that it does appear there's pent-up demand going on. There's something else that I thought was also interesting in the conversation she was having, is that the strategic reserves that are being sold out have, there's only about 60 million more barrels that Biden's going to be able to put out on the street to try to save his party. And it's a couple of weeks away. He's not going to have any effect. But one of the things that's happened in the Biden administration is they've taken the SPR and they've cited out certain numbers of millions of barrels to be converted into currency to work on infrastructure projects, which I found really interesting, since didn't they just pass a $1.7 trillion infrastructure bill? So why did they need to sell SPR to build roads and do whatever? There's some really strange stuff going on here, folks. But here's the thing that I think is interesting, is all of a sudden this I'm going to make an analogy, and if you're not in America, and maybe this won't make a whole lot of sense to you, but it's sort of like going for getting set up to actually it's a NASCAR race scenario. So you're going around the track. Should we go in and go out in and get gas during a green light, right? Well, if you go in and there's a caution, you're screwed. You're going to be at the back of the line. But that's what they're playing with right now. As if there actually is a crisis that we need SPR for, there's not going to be any opportunity to buy the stuff cheaper. Or if the scenario that is being painted here, that the demand is going to go substantially higher as we go into next year, and especially spring and beyond in 23, then two things are going to happen. As we get caught back, they're not buying anything at $70 because that's what they're saying they're going to do. That's not going to happen. The other thing that's not going to happen is inflation is not going to go down. In fact, it's probably going to go up. And I talked to last night about Janet Yellen tell us it's not embedded. Well, it is embedded, and it's about to get more embedded, I think. And this energy crisis that is going on is been partially caused by some of the cutbacks in the U.S. production, partially cut back from just the general philosophy of the current administration against fossil fuels. And then what we find ourselves in this incredible scenario of needing all the fossil fuels we can find, but we've changed because who we can do business with and who we can't do business with. And I'm just going to go on for a rant for another minute because this is a lot of things that are coming up. The other thing, and we're back to China and Xi Jinping, and there's serious efforts to put the BRICS together. And if you know what the BRICS is, look that up. Those are all the different countries that don't represent as Russia and China, Brazil, you name it. All these people are going to hook together, and there will be another currency, probably the yuan, most likely, and they're going to split the world. They're going to bifurcate the world, get away from the petrodollar that we've been living on, and all of a sudden, life in America looks a lot different if all these things happen. I don't know if they will or not. These are just things that are becoming possibilities, and they're worth talking about and putting out there and getting a debate. So I'm glad to hear you. I've got a lot of really great people that watch this channel, so feel free to comment on some of this stuff. But this whole thing is just coming to a huge, I don't know how the best way to put it. It's coming to a head. And oh wait, I forgot something. What about nuclear war? I just saw 3 things today in Newslines, how to prepare and what foods to have during a nuclear war. They actually said that shit. Sorry for the language, but it's just getting crazy. Oh, they're just acting like, oh, don't worry about it. You just buy these foods. Everything will be fine. It's crazy, folks. And, so there's, I've never seen a time like this. I'm a 70-year-old guy seeing a lot of stuff. Never seen anything like this. And I'm sorry that I'm seeing it now. And I feel for what the disruption could be if things get out of hand here. God forbid if we had a negotiated peace in Ukraine, right? Somehow make the world peaceful again. So it's interesting because anybody that sides with peace is now a Putin supporter. And I know I hate to put that out there for the algos, but I'm just kind of on one of those moments. Okay, so back to the markets, but this is all related because what's really going on here is all of these things are coming into a point where decisions are going to have to be made. And I don't think it's today, probably not 6 months from now. Hopefully we don't end in some kind of major conflict at any moment. I heard rumors of troops landing just outside of the Ukraine, the paratroopers, the airborne, I think 101. My father was in that. No, let's just hope none of these things that we hear are actually true because these are setting us into a crazy moment in time. All right, I've got a little bit off the beat on the markets, but all of this ultimately is going to affect sentiment, is going to affect everything. I think for the moment, and the moment is maybe the next 3 to 6 months, it's going to be interesting to see how the pieces of these things that I'm talking about here ultimately get put together, and ultimately how they end up affecting the markets, and if we can move well beyond a lot of these crazy geopolitical fundamentals and other things that are upon us at the moment. All right, so let's get into the database. Sorry for the rant, but it just kind of came out tonight, so we'll let that be. Let's go ahead and take a look at the database. So interesting. I've been talking to you about getting over 22%, and we did it. We're at 26.67 on the daily database, 1,940 new buy signals for the morning, 256 sells. Big ratio here, bullish on both models. Primarily 1.2 had the bulk of the buys. So this was a pretty substantial report that we had come out today. And next level, 28%. Above that, the next target is 42% bullish. We get to that level, we're going to get fairly, I think, fairly strong if we get up to that 42%. And all of a sudden, I'm gonna say a word that most people wouldn't think. Maybe we're challenging the 200-day moving average all of a sudden on some of these indices. Let's get into the S&P and take a look at that. So I'm going to show you a couple things here tonight, and the first one is just a normal thing that process that we go through, and I want to show you we did get a new buy signal on the Wavetech model. So we did get a buy signal. We'll find out if it's where it goes from here. But what we're seeing in the algorithms, I've been talking about this for well over a week now, going back to that reversal that we had. The algos have been predicting that the markets are going to get stronger. It also predicted that we were going to get toward these Fibonacci targets that are on the screen right now. And the Fib targets are 3750, already met that, 3845, getting very close to getting to that one. The final one is 3903, and this is just on the basic daily pattern. Okay, I'm gonna flop us over to the over here, and I'll show you. I'll put the let me just bring up this on here. Let me see if I can get it up. Put it on the screen for you. So what we're looking at is we got a buy signal of 37.71, which was the open, the U.S. Open this morning, 37.71. And like I said, if we go back over here, I want you to see this on the signal. On 7/18, on July 18th, we got a buy 38.95. That buy was the last buy we had on the long side, which was exited on 8/23, and on 8/23 we saw the exit come in, and that was at 41.63. That's the last buy signal we had, was on 7/18. So this is the next buy signal. We had two short signals during there. We had a sell at 39.56, and that was covered over here at 37.09, and now we've got our first buy since 7/18. So this one here was approximately 1 month out. So we went from 7/18 to the 23rd of August, and so that roughly is about 20 trading days in there. About 22, I think, was the actual number. So what we're seeing here is the potential beginning of a new trend. I'm going to go back over to the Trading View indicators, and we're going to go to the weekly chart here. This is weekly, and I want to point out, let me broaden this just a little bit. The algos on the weekly are also predicting and projecting that we're going to see more strength. We're still in a negative mode here on the PPM1. We're minus 1.26. What this is suggesting, I mentioned these numbers last night, and they're still at risk here, even though we got the buy, we could still have some adverse movement here. 37.97 is the 10-period moving average. I think what we're probably likely to do, just looking at the weekly market grid here, the weekly market grid suggests the ranges are going to be possibly at this. The 10 is 37.97, already breached that. 21, 38.95. We look at the market grid, and R2 is 38.43, and this is weekly now. And R3 is 38.91. So that puts us up toward these numbers here around the 21-week moving average. I still think there's a good chance that we could get a reversal out of these levels here and pull back a bit, but we're going to stay well above the 200-week. And let's go back to the daily chart to bring that into perspective here. So the daily is, like I said, suggesting that we're getting this little ABC movement up. Possibly it ends up extending up toward there. Now, I want you to notice I mentioned the 200-day moving average. The 200-day right now, is at 40.85. I just showed you on a weekly. That's within the bounds of a weekly move. I don't expect it to get hit this week, but it looks like we're going to head up to the 200-day moving average is likely, which would be, we're already at the 10-week, be around the 21-week moving average. I think that's a pretty good mode. I got rid of the bot. Should be out of there now, hopefully. So the pattern that is setting here on the daily says that I went through this calculation all the way for about 6 days. It says we're still going to be, PPM1 is likely to stay around, I'm going to call it 0.5 to 0.85, which is trend mode. So this 10-period moving average is going to continue to rise underneath this market, and the 10 is going to be your primary support level that you want to watch. So watch a simple 10. The 21 is also projected to get up into trend mode. So like I've told you, it's simple math, folks. Only way for these moving averages to rise is to stay above them. That's it. No other way. So if we start trading below them, that's not going to be how it works. So that's going to be your support lines. 10, 21 right now, those levels right now are 36.72 and 36.77. So they're a little ways away. But the point is that those are going to come into the action very quickly. So watch for that. So as always, when I'm doing these streams, I focus on the S&P, and I'm just going to comment whether the other indices confirm that as we go through the NASDAQ and others. I appreciate that. Hang on. All right, next we'll take a look at the NASDAQ futures. Same configuration, PPMs all turning up. We should trade within the ranges, and I didn't cover the ranges for the S&P, but look for, once again, S1 R2 is likely for today. If we don't get above R1 on both of these indexes early in the session, then we're likely to see a little bit of a pullback. The same numbers here, 1021 is right where they're converging right now at virtually the same point. The 10 is at 11,150, 11,222 is the 21. So they're converged right in that level. That's your major support. algos are all suggesting continued upward movement in the moving averages. Markets should remain above there, even if we got into a sideways range. The targets on the upside, 11,323 is the minimum target, which has already been met. The next target 2 is at 11,640 and then 11,840, just rounding numbers off. So we're still looking at some pretty good projections going forward. Next, we'll cover the Russell. The interesting part of the Russell is I mentioned this a couple of days ago, our fib projections coming in here right now are suggesting that we're going to come up into the fib target 2, which is 1830, 1860, which, by the way, the 200 is 1873. So we're starting to get a lot of projections toward the 200. We had one earlier in this pattern, but this is a continuation pattern. And just the only thing that's different about this one is that we're not getting as strong indications from the algos, but we are getting indicated that we are going to stay within a trend mode up. So the same levels are going to be good supports, the 1021, which is 1031, 1022, 1731, 1722. So we're right into that range. That's where your major support is. So this should also continue in this upward slope, probably getting to these fib targets and ultimately challenging the 200-day moving average. All right, we'll cover the 10-year next, and this is the daily. We're still maintaining trend mode here. We're at 0.86, 0.66, 0.83, and that I'll just mention these targets again. At 505, 503 is the upward targets here for this market. I still think there's a lot to go. I don't think we're close to completing this increase in the interest rates. Just don't see that in the cards. These trends are all up substantially. I did notice something that was kind of interesting, is that the 10-year, I've been talking about this, the 10-year was lower than the 30-year was lower than the 10. All of a sudden there's a lot of selling going on in the 30-year. And I happen to think that this is part of the Fed's runoff that we're seeing here. I'm just guessing at this. I don't have any knowledge of that, but I'm thinking that there's a lot of sellers. Typically, that's not traded. When I started in this market, when I was a kid starting in this market, we traded a 30-year bond. We call it the long bond. The long bond was what we all traded. That was central to everything in the banking system back in the day. It wasn't until the Clinton administration and when Rubin was the Secretary Treasurer that we actually got, we kind of converted the debt structure of America. And I gave Rubin one of the top treasuries maybe ever, because he did some amazing, he shortened the duration of the entire U.S. infrastructure, and when it came to loans, and that was in hindsight and foresight and every sight, it was brilliant. It was a brilliant move, and it was just fascinating to watch that back in the day, because everything was structured longer, 20 plus, and it's just with the way things are structured now, at least to make a turnaround rates. A lot of these coupons are fairly low and will start, they've got some longevity on them. So except for what maybe the Fed's letting run off. And I think if they're going to run anything off, they want to get rid of the highest coupons that are laying out there, and the 30 years still has probably more of those than anything else. This is a guesstimate of I don't have any knowledge of this, don't have any stats. It's just watching market action, and I'm guessing that's probably what's going on. But so this whole structure of the markets right now says get rid of the highest and oldest yields and bring the debt structure down, or the cost of the debt structure, the best we can. And that's the best way to do it, is get rid of these things, get them off the books. So especially if you're the Fed. So like I said, it's a guesstimate and a theory only at this time. I'll try to see if I can validate any of this stuff, but it was, and making my notes tonight, looking at the bond notes, that's what I came up with. So here we go. But just to go on to this 30-year, the 30-year is right now, it's at 436. 10-year right now, 423. And like I said, it was lower. We were at 4%, 380s in the 30. So I'm just, like I said, I think that's my theory on what's going on. And maybe there'll be some release or something going on. I know we've got some information coming out on the Fed's structure of their book coming out fairly soon here. I think at the end of the month here, next week or so. Anyway, this is that's kind of what I'm looking at here. What does it mean? Just means that's where the Fed's doing the selling. That's why you're seeing that type of thing go on there. Generally speaking, all of the trends on the interest rates are up. They're not topping out. They're not completed yet. There's a lot to go. I mean, for instance, this is a daily. We're 1.28. If I flip this over to a weekly, what you're going to see is monster trends of 3.14, 1.77. It takes literally months to burn off that upward momentum that we have up there. All right. Next, we'll cover crude oil. I'm probably don't have anything more to say than what I've already said on the opening comments. So if you're just joining now, make sure you go back and watch the opening comments on crude oil. But basically, as I've been saying, I'm really looking at 82, 92 is the trading range. We've got some resistance up here right at where this is the weekly, the 21 and 40 week moving averages are printing up there. That's where it's at. Let's go over and bring this up on the algos here. Let's get over to weekly. Yeah, I mentioned this last night. I've got the Fib projection, Wavetech projection up here, and you're looking at range of 107, 118, 126 on crude. And by the way, just one thing I will say is if the crude oil does get that crazy bid, and we do hit, based on my comments I made on the opening comments, is the XLE and these gold stocks are going to be gold stocks. Oil stocks are going to be gold. So you can take that one to the bank. If we print anywhere up here, these stocks are going to go absolutely crazy. And having said that, I'll just put XLE up here, and you can see that right now we have fib targets up to 100.50 on XLE, and the algos, this is weekly algos, they're all ppm 1 and 2 are staying positive, which means this underlying support is going to be huge. So just know that these oil stocks are going to continue to do very, very well, and in fact may be the big winner of this cycle that we're in. And this cycle actually really starts, if you've been following me for a while, in November of of 2020, I was screaming about the oil stocks. In January of 2022 was a cycle 2 of the oil stocks. And it looks like this thing just wants to keep going and going. I'm going to put a monthly graph up here. And it's just, we haven't even gotten back to the old highs once upon a time, going back into July of 14. That was at 100. So we're looking at the potential for these stocks just being huge. And I don't see it changing at all for a while based on the whole scenario, because there's no way that the demand on oil is going to go away. If, in fact, as I pointed out, it's going to go up substantially probably next year with China and Asia getting more online than they are right now. And then ultimately, where crude goes is going to drive all of these stocks up, and also it will embed inflation into our economy. So we're long from over on this cycle, folks. I hate to say it, and I would like to be absolutely wrong and be willing to take that hit, but unfortunately, it doesn't look that way. I've talked about this a fair amount. Gold. This is monthly. We're going to start really long term here. Gold's, it's interesting. Algos are suggesting that we're going to stay in this downtrend for a number of months, 5 or 6 months at least. And all that can be hoped for is that we find a bottom here before we get down to the 200-month moving average, which is down in 1370 handle, something like that. But if we go over to the weekly here, we'll see that the weekly is telling us we don't have to worry about that we're likely to get this and potentially bottom in this area here, because the algos on the weekly are suggesting at least we're going to stay in a trading range, and I'm going to call it a trading range somewhere around 1620 to as high as around 1710, 1750. So that's what the algos are telling us. I think this is probably the best thing. I don't think there's going to be a complete collapse. However, if I'm right about the markets and as far as what's going on with interest rates, there could be another leg down in gold for sure. But right now, next 5 or 6 weeks, it looks like sideways, slight up. We have the 10-period moving average at 1680. We're going to have to get above that and maybe above 1720 to get anything going of any reality. Next, we'll go through Bitcoin. Kind of a broken record here, folks. I'm just looking at the weekly. I've talked to you about this last night, that we just continued to trade in this sideways range. And what's interesting is PPMs are trying to turn up. I'm going to do something. I'm going to try to reset this. Didn't work. Trying to get the algos to work. There's certain markets that I've noticed having some issues with the algos working, but the bottom line here is on this is weekly. Let's go to daily. Yeah, I have no idea what's going on. That's probably my one pet peeve here with trading view, is just the scaling in general is kind of really wonky. But anyway, like I said, we did get today, we got some new upward targets. 2485, 21200. Well, I'm just rounding off 21600. New upside. Now the algos are working here on the dailies now. I'm going to try to go to weekly, hopefully get them it does show really stability, just staying somewhat positive that the 10-day moving average is going to continue to keep some support underneath this market at this time. Okay, folks, I'll actually address a couple of comments. I see Ronald Ford says, does gold price predictions indicate further strength in USD? Probably so, probably higher interest rates, all of that. And I didn't cover the yen tonight, but I can tell you the yen is not, they're not out of the woods yet. They still have lots of issues going on. Their little intervention they did, we're still trading above the original trigger price that I talked to you about at the 148.50 level. Last time I looked, let's put it up here just for fun, just so I can see it. Yeah, we're trading 148.9, and so there's still trading above that. 148.50 is an interesting price zone because it's going to force them to continue to have to defend. And if they end up capitulating and the dollar does run, I still think on the 10-year and all of the interest rates, there's still a possibility of 430 plus on the 10. I showed you a little bit ago that the 30-year was already at the, at 430, 436. So we're heading ultimately, I would think, on the 10-year, anyway, very close to the 5% level. It's not going to stop just here. The Fed, we get to have lots of Fed fund next week, and I think we'll probably do the same thing we did the last time. I will do a live stream on Wednesday, and we'll kind of do a combination of live trading room and covering the Fed next Wednesday. So mark your calendar on that. But the whole situation that we have going on as far as the dollar goes, the Japanese yen, there's just everybody who's not the U.S. has got a problem. And the dollar, the king dollar, is about to probably destroy everything. That's still part, like I said, the main things that are up, the dollar's in uptrend, all the interest rates are in uptrends, and we've got maybe a short-term little bounce coming here, maybe to the 200 on the equity markets. But so anyway, folks, that's going to do it for tonight. And I'm just killing, I got to kill them before they get going. I just killed one of the bad guys out there. Yeah, and that's the other thing. I'm just looking at a couple of comments here. I'll stay with you for a couple more minutes. I got a late start. Yeah, ultimately, gold and oil are probably going to have a lot to do with each other when it comes to prices. We're going to see some things catch up. So anyway, folks, that's going to do it. No live room tomorrow. We'll see you guys on Wednesday, and we'll see you, everybody here. I'll see you on YouTube. Make sure you get those 1,000 likes out there. I should have mentioned that earlier, not at the end. But anyway, thanks again for watching. Really appreciate it. Have a great day trading tomorrow.